Welcome to this explainer. Today, we're diving into a genuinely ambitious, high-energy pitch deck, the 2027 strategic vision for the Mab Fragrance Company. It's a really fascinating look at how a business plans to transition from its early, founder-led validation phase right into a highly structured, scalable, African industrialization ecosystem. Let's just jump right into the mechanics of this pitch.
Africa's industrialization is possible. We're starting off with this powerful quote right from the company's pitch document because, well, this core belief literally drives everything they do. What Mob has identified is that Africa already has the entrepreneurs, the technical professionals, the suppliers, and absolutely massive consumer markets. The raw ingredients for a massive industrial boom, they're all there. But what's often missing? The connective tissue, the infrastructure that links an isolated idea to a fully functional, revenue-generating factory. Mab Fragrance Company is positioning itself as exactly that missing link.
So, how are they actually doing it? They call this solution the connected pathway. Because right now, the entrepreneurial journey is incredibly fragmented. You know how it is. Someone might get the training, but they completely lack access to suppliers. Or maybe they have a killer product idea, but no technical formulation skills. Or perhaps an existing manufacturer has spare capacity, but zero connection to the booming SME market. Mab proposes a totally seamless pathway. They take an entrepreneur from step 1, training, straight through step 2, formulation, directly into step 3, manufacturing, and finally step 4, pushing that finished product right into the market. They're aiming to make it fundamentally easier to build businesses by eliminating that massive friction between a raw idea and a finished product. Section 1. Products proven in market.
Now, to back up that validation, McLab presents Jutland. This is McLab's very own in-house brand of luxurious, high-end, fine fragrances. It's a premium product, perfectly formulated and completely market-ready. By actually manufacturing their own brands alongside helping other entrepreneurs, McLab essentially proves the high-quality capability of their ecosystem, all while building a highly profitable, standalone revenue layer for themselves. It's a really smart play.
And right alongside Jutland, we have Rayon. This is their highly scalable mass market line. We're talking high-volume dishwashing liquids, washing powders, and those essential household cleaning solutions everyone needs. It's such an interesting contrast, right? They're perfectly balancing delicate, high-margin perfumes with high-volume, everyday cleaning products. It just goes to show that their manufacturing pathway can handle absolutely everything, from premium luxury right down to industrial-scale detergents.
To tie all of these physical products, raw materials, and educational resources together on a continental scale, they're going digital with Mob Connect. Think of it as a central online marketplace where entrepreneurs can stop searching and start building. Need a perfumery course? It's right there. Need to source raw materials? Bam, got it. Need a manufacturer? You guessed it. It takes this entirely fragmented physical supply chain and brings it into one streamlined digital hub, complete with payments and delivery built right in.
Section 2, 12 diversified revenue streams. What's really crucial here is that McLab outlines they don't just make money one single way. They actually have 12 distinct revenue streams. The big, lucrative drivers include selling aroma molecules and raw materials, moving finished products like Rayon and Jutland, offering professional training, providing technical formulation services, and sourcing equipment. Think about the massive potential for cross-selling here. A customer might pay for an online formulation course today, tomorrow they buy raw materials from McLab, next month they pay McLab to design their packaging. It creates this sticky, recurring business model with an incredibly high customer lifetime value. Now, here is the absolute focal point for their massive 2027 growth target, the planned Albesc partnership. This is positioned as a total game changer. This partnership is specifically designed to secure high-volume B2B distribution of essential aroma molecules. What does that actually mean? It means Mab won't just be selling tiny quantities to individuals anymore. They're positioning themselves to supply perfumers, cosmetic businesses, home care manufacturers, and other SMEs all across Africa with their fundamental raw ingredients at a massive scale.
But wait, what about the actual factories, right? Well, the manufacturing partner network is exactly how they plan to build incredible scale without taking on a heavy capital burden. Mab uses a very clever two-pronged approach. First is build. If an entrepreneur already has the capital, Mab steps in to help them set up their own factory using Mab's standard operating procedures and IP. But the second option, access, is where the magic really happens.
If an entrepreneur doesn't quite have the money for a factory yet, Mab simply connects them to an existing partner who already has spare production capacity, meaning Mab doesn't have to build and own every single factory themselves to control the network. It's a brilliant, completely asset-light approach to industrial expansion. Section 3. The 450K Catalyst. So, what is the ask? It's exactly $450,000, and Mab is seeking this specifically in hybrid financing. Why hybrid? Well, by going this route, they argue they can rapidly accelerate their commercialization and transition right into a fully structured investment-ready operating model, all without relying exclusively on giving away massive amounts of equity at this crucial early growth stage. It's a highly calculated, smart ask meant to pour fuel on a fire that is already burning brightly. And that $450,000 is going to be aggressively deployed. A full 25% is dedicated to launching the Mab Connect tech platform, that digital hub we talked about earlier. Another 25% goes straight into working capital and inventory, largely to support that massive B2B raw materials distribution through the Albesc partnership. The remaining funds are allocated, 20% to team and operations, 15% to commercial market expansion, and 10% to really formalizing their training and manufacturing partner networks. It's a hyper-focused deployment aimed strictly at revenue-generating activities. When you look at their execution plan, the phases are crystal clear. Mab isn't asking for money to just figure things out. No. 2026 was about validation, proving that people will actually pay for the training, the materials, and the products. This 2027 capital raise is entirely about commercialization. It's about structuring the business, locking in that distribution, and launching the tech. Once that strong foundation is set, 2028 is mapped for cross-border expansion, paving the way for true Pan-African scale by 2030 and beyond. They are absolutely playing the long game here, executing in deliberate, highly measurable phases. Which really brings us to the final point of this explainer. Mab Fragrance Company claims the formulation IP, the physical products like Rayon and Juthland, the digital platform strategy with Mab Connect, and the connected pathway to turn raw ideas into a thriving industrial reality. They are aiming directly at the fragmentation problem holding back African manufacturing. The strategy is validated, the 12 revenue streams are mapped out, and that $450,000 catalyst plan for 2027 is ready for action. So the final question left by this pitch deck is honestly bigger than just one company. Could this connected, asset-light model actually be the blueprint that finally unlocks Africa's manufacturing potential? It's an incredibly fascinating vision. Thanks so much for joining me on this explainer, and I'll catch you next time.